new to CFD, or if you have only been trading in the stock market, then I hope you will be able to take away something from this session. Also, all information presented today does not constitute to any investment advice, so please treat this webinar solely for education purposes. Okay. So this is what we'll be going through today. Firstly, on understanding CFD, which is what CFD is and some of its features. Also, we'll be looking into what is margin trading and some of the risks associated with margin trading. Then we'll look at why CFD is appealing to some of the traders, and also understanding the basic order types for you to execute your trades and your trading strategy. And then we'll move on to this MP5 live platform demonstration on how you can place trade and how to add in some indicators and all, before ending it with some broker support that we can provide to you as traders. Okay, so what is CFD? CFD is derived from the term contract for difference, and it is an agreement between two parties to settle the difference between the opening and closing price of the contract. So what this means is that CFD allows you to trade on the price movement on underlying assets such as an index or stock. If you think that the price of the underlying asset will be going up, then you can buy the CFD and benefit from that rise. And if you think that the price will go down, you can sell a CFD and profit from that fall. So there are various CFDs which you can trade from, such as commodities like crude oil, indices like Dow Jones, S&P, or Asian indices like Hang Seng and the Singapore Index. We also offer US, Singapore, and Hong Kong share CFD, such as DBS, Boeing, and Tencent. Okay, so this is an hourly chart of the S&P 500 index from mid-June to July. If you look at the price movement of this chart, we can see that there are many opportunities which you can profit from in this rising and falling market. So trading CFDs does not restrict you to capture only the upside potential, but you may also profit from a bearish market as well. If you predict that the contract price will rise, you should be going long on the contract. And if the prices from the price which you entered, then if it rose from the price you entered, then you will be in the profit. So the same thing is if you predict that the price will fall, then you can be going short on this particular contract. And in any case, if it falls, then you will be in the profit as well. So CFD is also traded on margin, which means it is a leverage product.
Hi, Ethan.
Yes.
Sorry, we're getting comments. Your presentation is still on the first page. Maybe you wanna try again.
Oh, okay. So sorry. Let me try to.
Yep. Okay, we can see now.
Yeah. Can you all see now? Is it? Yeah. Are you able to see?
Yes.
Yeah. Okay. So okay, maybe I just do a very quick run through for the previous slide. Okay. So CFD is basically contract for difference, agreement between two parties to settle the difference between the entry and closing price of the contract. Okay. So this one is just the chart that I was showing earlier. That is a S&P index from mid-June to July. So as you all can see from this chart, prices do not usually move in just one direction. So you guys can also profit from both a bearish and a bullish market. Okay. So now let's look into an example of leverage trading and how it affects your P&L in an actual trade. Okay. For CFD, right, it's a leverage product and it's traded on margin. I think this picture here explains the concept of leverage very well. When you are trading on margin, it means that you are essentially using a small amount of money to control a large contract. So if you are using $200 to control a contract size that's worth $10,000, effectively you are leveraging 50 times. However, you have to note that it's important to note that leverage can amplify your profits, but it can also amplify your losses. So this is kind of like a double-edged sword. Okay, to further zoom into an example of how leverage can affect your P&L in an actual real-life trade. So this chart here is showing the hourly price movement of S&P 500 in August. Assuming you buy into this contract when the index is at 3350 and the margin required is 10%, which is USD 335. This also means that the leverage is 10 times. Okay, now if you manage to capture this movement here from 3350 and exit the trade at 3400, you would have made a profit of USD $50 with just the initial capital of 335. So this translates to a profit of 50%, 15%. So what I want to emphasize here is that that when you're trading leverage products, a small price movement such as 1.5% can result in high profits or loss. So in this example, this 1.5% movement actually resulted in a 15% P&L based on your capital. Okay, so in a way, leverage is, like I said, it's a double-edged sword, and make sure you have a trade plan and a stop loss in place when you are trading this kind of leverage products. Okay, if you are familiar with investing in shares, then there are actually more factors that you need to be aware of when trading shares CFD. So just a very quick example here. So say if a trader is bullish on DBS shares and notices that the share price do not usually fall below $18. So he has this plan to buy them at $18 and sell them when it is at $21. Profiting $3 for every share that he owns. So this is relatively straightforward when trading shares, because essentially you fully pay the shares at $18 and profit when there is a rise in the share price. However, in CFD, there are other considerations which you need to be more aware of, such as what is the notional value of the contract you are trading in, what is the initial or maintenance margin required to trade this particular contract, what about the account balance you need to maintain to prevent liquidation of your positions, and at what prices must the contract be trading before they are liquidated. So I think these are important considerations which you will rarely think about when you are trading stocks, because you have already fully paid them instead of leveraging on your capital more. Okay, so if we compare trading stocks to trading indices, there are also actually some benefits when you trade indices. Of course, the first point being that indices generally don't tend to plunge due to one company performing badly, as trading a basket of these stocks helps to cushion the poor performing companies. Also, you do not need to stock pick or do any company analysis when you are trading index. So if you look at this S&P US index such as S&P or Dow Jones, right, it actually provides an indication of how the US equities market is doing. And usually this index and the underlying stocks, right, they move in tandem. So if the US index moves up, majority of the stocks should also be moving up in theory. Okay, so when you're trading index, generally you want to be more aware of the economic data such as interest rate decisions, non-farm payroll, and also things like inflation rates. So these economic indicators will definitely affect the price movement of the index. So one use of CFD is also to speculate on these indices. Okay, because CFD is also trading on margin, there is something known as margin call. When you're funding only a small deposit to trade a bigger contract, right, you actually need to maintain this required level of margin to continue holding the position. So the question is, when will the broker issue a margin call? So this happens, right, when your equity balance does not have sufficient funds to meet these required margins. This is also known as a margin deficit. So what I mean by account equity is that account equity is whatever you have funded in your trading account and then minus whatever unrealized losses or floating losses that you currently have. So maybe to quote you an example, so let's say if you have this contract in mind that is worth a notional value of US dollars 10,000, and then you only fund 1,000 in your account, which is also the margin required, which is 10%. So just an example. So to trade in this one contract example, if you just fund US dollar 1,000 to meet the required margin to trade one contract, a 5% dip in this contract would also mean a 50% unrealized loss on your capital. So to continue holding this contract, you will need to top up to ensure that your account equity to top up to meet this 50% unrealized loss. Okay, so what happens is that usually brokers, right, they will give you 2 days to top up for margin call in order to bring your equity back to the required margin. So failing to top up to meet the required margin will result in brokers liquidating your position. So something about Phillip is that for our trading platform, Phillip Futures MP5 platform, there is no requirement to top up within 2 days. And instead, our platform has this auto liquidation function where your positions will only be liquidated when your equity falls below 20% of the required margin. That being said, it is still advisable to not use your whole account balance as margin and to leave some excess to buffer for market volatility. So all in all, you need to be more aware and manage your risk well when you are trading on margin. Okay, so moving on, let's take a look at why people find CFD appealing. Oh, okay, of course, firstly, right, CFD is bi-directional and your trades are not restricted by market movement. So this will enable you to profit from both rising and falling markets. Secondly, apart from speculating, which is to profit based on your market views, you can also hedge your stocks portfolio from potential downside. So what I mean is that let's say if you're holding a lot of shares that pays a good dividend, but you also know that the share price will dip during this COVID period. And if you sell your shares, you do not know where you can park your money into. So what some people do is that they will not sell their shares, but instead they will short the CFD shares. So if the share price drop, of course you will have losses on your physical shares, but you will profit from your CFD trade. So in this case of hedging, right, you are not looking to actually earn money, but instead you are looking to mitigate your risk. So this is also one use of CFD that you can actually consider. Another thing that why people like CFD is because of this leverage function. Okay, leverage is also one main key reason because it provides some form of capital efficiency and it frees up your other funds for other investment that you can make. CFD is also very simple to trade and it has no contract expiry, unlike futures trading. If you are trading indices, it will also save you the process of stock picking and doing company analysis. Most of the CFD contracts are also generally smaller in size, and this means that small is a small notional value as compared to trading futures. This will make it especially suitable for newer traders as well due to the small contract size. Okay, moving on, let's look at some of the order types that you will see in the platform. And actually, this order type is the basics that you will also need to know for you to execute your trading strategy. Okay, so the first order type we'll be looking at would be a market order. So this is actually the most straightforward order type. So in every contract, or be it when you're trading, right, there is always a bid and a ask quote. So this is also known as the buy or the sell price. Okay, so bid is the price for you to sell at, and ask is the price to buy at currently. Okay, so the difference between this bid and ask is also known as the spread. For market order, what it means is that you are looking to buy or sell a particular contract immediately at whatever price the market is quoting. So this is relatively straightforward. In this example, if the market is quoting you at 3420 to buy and 3419 to sell, So if you hit buy, this is a market order. Okay, so the next order type that we'll be looking at is limit order, which is to queue to buy or sell a contract at a specific price or better. Okay, so essentially same thing. Let's say the market is quoting at the same prices right now. What you're trying to do with a limit order is you're trying to sell higher than what the bid is quoting, or you're trying to buy lower than the existing offer. Okay, so what you're doing is to queue to buy it at a better price. So let's say the S&P is doing, let's say at 3420 right now to buy. You want to put a limit buy order at 3300, for example. You want to put a buy limit lower than 3400 and a sell limit that is higher than 3419. Okay. The next order type that we will be looking at is actually a more confusing one. It's known as a stop order. So what a stop order does is to buy or sell a contract once the contract reaches a specific price, also known as a stop price. When the price is reached, a stop order becomes a market order. In a stop order, you are trying to buy higher and sell lower than what the market is quoting. So if the market is quoting at 3420 right now, you're looking to buy only when it reaches 3005, or you're only looking to sell when it reaches 3003. So I think for this particular order type, right, some of you may be a little confused because the common question for this order type is that why would somebody want to buy a contract higher than the market price or sell lower than the market? Isn't the market quoting a better price right now? So of course, there are definitely two main users for stop loss, okay, for stop orders. The first being an order type to indicate your stop loss level, and the other being to initiate new positions. For the Phillip MT5 platform, right, you will not need to use this order type to indicate your stop loss. More details will be shared in the platform demonstration shortly. So we also use stop orders to initiate new positions. So this is mainly for trading breakouts. So just some background on breakouts. So a breakout happens when a stock or index price, it breaks through this defined level of support or resistance. So usually when a strong support level or strong resistance is broken through, right? When the price breaks through, volatility tends to increase, and then prices usually trend in the breakouts direction. Okay, so if you see from the picture here, let's say we can identify that there's this is trading in this channel, and then prices broke through the support level. So what happens is that this is actually a breakout, and you will want to place an order that's below the support level, so that when prices break through that particular point, you can capture this movement. Okay, so I think moving on, maybe I can show you guys this our MT5 platform demo and how you can place trades on the demo, so you have a better idea on CFDs. Maybe let me share my screen on this platform demo. Okay, so I hope you guys can see this one is the MT5 platform. So for MT5 platform, right, it is actually quite a simple platform to use. It may look a bit complicated and confusing at the start, but trust me, once you play around with the demo, or once you place a few trades, you will be quite familiar with this trading platform. It's not very difficult to use. So on the left-hand side of this platform, you can see that there is something called a market watch box. So in this box, there are different products which Phillip Futures offers on MT5. You can see that there's a mix of products such as 3M from NYSE. And then we also have some forex pairs, and then we have Bitcoin as well. We have index as well, such as a Hang Seng index, and then there is Nasdaq, S&P, so etc. So this one is a current list of products that we offer right now. We have forex, we have CFD shares, we have CFD index. We also have gold and silver, which is a very popular bullion. Yep, and also on cryptocurrency. Okay, so for a start, when you are just when you just log into this trading platform on, let's say, a demo account, you have to pull this particular counter to this gray area, and then you get to see a chart here. Okay, so example, XAU USG is a gold. So if you look at the default chart, it looks kind of like a black, and it's a candlestick, looks something like that. So how to change the chart, right, is to actually right click on here, go to properties, and then you can actually play around. You can change the color scheme on the chart to something you like. So what I like is to see a bull candle in green color and also a bear candle in red color. Okay, so this one is how you can customize your chart accordingly. Indicators wise, of course, this platform supports many indicators. If you are looking for the common indicators such as a moving average, it can be added over here under insert indicators. So moving average, of course, is to determine the trend. Popular moving average are like 50 moving average, 50, and then usually we look at EMA, exponential moving average. So if you click on OK, then you get to see this EMA, 50 EMA on the chart. So you can keep on adding, of course, more and more moving averages to look at where the trend is right now, and then color coding each of these lines with a different color. So to zoom in and out of this chart, right, there is a magnifying glass on the top. So if you just click, and then it zooms out. And if you click this plus, it zooms in. And on the top, of course, there are time frames. This one is a 1 minute chart. And then we have 5 minute, 15 minute, 30 minutes, 1 hour, 4 hour daily. And then of course, if you are looking to hold really, really long term, you can look at the weekly chart or even the monthly chart. Okay. So for this platform, right, the order placing is also very easy. So few things you can do. Over here, you can actually hit buy or sell to execute a market order. Okay, so this one is also a one-click trading. So for my demo account, right, I've enabled one-click trading. So whenever I click this buy, it immediately fills for me to buy one lot at the market. So of course, if you don't want to buy one lot, you can buy half a lot or even 0.01, which is 1 mini lot. So if you click buy, straight away, it's over here. So one-click trading is enabled, so there is no trade confirmation this time. Of course, if it's your first time pressing this button, there will definitely be a trade confirmation in case you press wrong. So once you enable one-click trading, you can actually buy and sell with just one click. And then you can also close your trade with just this X, one click. So this one is for market order. If you are looking for a limit order, which is just now what we shared, so under the type here, this is an order ticket. You can trigger this order ticket by double clicking on any pair in this watch list. So let's say if I look at S&P, the code is SPX 500. So let's say if I double click this counter right here, there is this order ticket that pops up. So in this order ticket, you'll be able to tell that the symbol is what you're trading on is a S&P 500 spot index. The type is the order type. So exchange execution actually means a market order. With exchange execution or market order, you don't get to indicate any price because you're actually going to buy or sell at whatever the market is quoting. So if I buy now, I'm actually buying at when S&P index is at 3282 points, and if I sell now, I'm selling at 3282.1 point. Okay, so if you have identified certain key levels, example, this one is the S&P chart. Okay, let's say you have identified certain key levels, and then you only want the orders to be executed when it reaches a particular level. Example, if you think that in September, this particular level here is a good support level, 3220, and you do not want to buy right now. You only want to buy in when S&P is at 3220. Then in this order ticket, right, you can change from exchange execution to a pending order. So of course, this order, you have to put in a buy limit order, which is to buy one lot at the price you want. So this price field here is the price that you want to indicate for your orders to trigger. So if I click on place, there is this order here right now that says it's a buy limit order to buy S&P 500 when the price reaches 3200. And then of course, if you identify that this is a good level for you to short, if prices reach this particular level and you're willing to try to profit when it reaches 3500 by taking a bearish view, then of course you can place the opposite direction, which is a sell limit at 3550 example. Okay, so in this order ticket, right, you can already indicate your risk parameters, meaning to say SL stands for stop loss and TP stands for take profit. So what you can do is that in the order ticket, you can already place what you want your risk parameters to be. So example, in this particular case, when you're buying S&P at 3200, you can actually put a stop loss at 3000. When it reaches 3000, this particular trade will close by itself. Or you can say that you want to take profit when it reaches the identified level here at 3500. Okay, so when you modify, the order is already done up, meaning to say the trade plan is already there, your entry point is there, your risk parameters, your stop loss level, your take profit level, everything is there. And this is not even an open position, it is just placed, working there for you. So in the case that you want to hit the market, so let's say if you're willing to hit the market at 3283, you think that this is a good level for you to get into this trade, you're willing to get in right now, you can also buy at 3283, and then your stop loss, maybe you say you want to exit at 3200 and take profit when it reaches 3400. So immediately you can buy, and then there is this TP and SL level already. So of course you can remove this anytime, and you can also trade on the chart. So what I mean is that by trading on chart is that, let's say you have already entered a trade here to buy at 3282.8 over here. There's this dotted line. So if you are trading on chart, right, you can actually pull this dotted line. You can just drag it up to a certain resistance or certain take profit level, and then it will populate over here. It will amend your order here to, it will take note that, okay, so what you want is to take profit when the price rise to this level. And then if you want to put in a stop loss, of course, the same thing, you can pull from this line, you can drag it down, and then there is a stop loss level over here. Okay, so this line, of course, you can play around. You can just drag it to amend whatever levels you want. And then same thing for the take profit level as well. You can just amend it. So if you are doing certain strategies, like let's say if you want to do some scalping, right, very, very short term, then yes, probably this function is very easy for you to amend your orders, and also on your both your take profit and the stop loss, to amend your risk parameters. Okay. So other things that offered in this is, of course, common things like RSI. So RSI is basically this relative strength index. So it helps you to identify oversold or overbought conditions. So a few things that we have here also in the MP5, which I will share more later in my slides, is a plugin. So maybe some of you have heard of MP4. MP4 unfortunately doesn't really support plugins. So third-party plugins, you can't plug into this to get things like market scanners or risk calculators and all. So MP5, right, as customers of Phillip Futures, we have some plugins that we actually pay to the vendors for you guys to use for free. So more on that, of course, will be shared later, okay? So this is just a very, very simple overview of this MP5 on how you can change this chart to your preference, how you can add some simple indicators and oscillators, and how you can place orders. Of course, there are some other things that's not covered, and if you guys have any questions, just feel free to engage us after this webinar, and then we'll be happy to assist you on that as well. Okay, so product wise, of course, we offer forex, CFD, and bullion. Regarding lot size, let's say over here, if we are looking at S&P, right? SPX. Okay, so one lot here, you may not know exactly what does this volume 1 stands for. Okay, one lot here actually stands for one lot of this contract size at 3283 points. So at 3283 points, right, this particular S&P index is worth $1 per point. So your notional contract value is actually 3282. So how you can find out is that you can actually right click on the contract. There is this specification. So everything is actually very transparent here. It tells you that this contract size is 1:1, meaning to say 3285 here is equals to 1. So one lot is actually 3,285. And then it tells you the margin required as well, which is 329. So that also translates to a 10% margin requirement. Okay. So over here in the platform, you can also tell your live P&L. There is this floating profit and loss that is very clear. It shows you your account balance, your equity level, how much margin you have used, and of course the remaining margin that you have available and a margin percentage. So this margin percentage is the one that you need to be aware of. So when it reaches 20%, like what I said earlier, then there is this auto liquidation. Okay, so other than that, you'll be safe. Okay, so maybe I can move back to the slides to share a little more on what we can offer as well. Okay, just give me a moment. I'm having some trouble to pull out the slides. Okay, so let's look at now. Of course, there are many brokers in the market currently that you can choose to trade with. But just let me do a very quick sharing on the support that Phillip can offer you to trade CFD with us. Okay, so firstly, we are actually using the MP5 platform, and we are the first broker in Singapore to offer it. And trades done on MP5 is actually on 0 commission. So be it you buy or sell 1 time or 100 times in a single day, there is no commission charge. Okay. Apart from our platform, we also have this daily market commentaries such as updates on gold, crude oil, and some forex pairs. So these commentaries are exclusive for our clients only, and we actually forward them on WhatsApp. So I believe everyone mostly is on their mobiles right now, so you can get on-the-go news on WhatsApp as well. So Phillip Futures has also been around for more than 30 years now, and we are one of the founding clearing members of SGX Derivatives Trading. So in Singapore, as a regulated broker in Singapore, of course, we are also regulated by MAS. So if you're looking for a local broker, which is safe and trustable, you can consider to trade with Phillip Futures. Our IT and dealing desks are also 24/5. So in the event that you face any technical issues or if you face any disruption in the middle of the night, we have this dedicated line for you to call into. So you can have a ease of mind that there will be some support for you in the event of any unlikely disruption. Okay. Other than CFD, we are also offering other asset classes as well, such as forex, futures, and options trading. So this will be convenient for you if you are looking to trade other products as well with one broker. Okay, as I was saying just now, right, for MP5 platform, we actually pay this additional plugin for our clients to use for free. So this is just an example of one of the plugins that we offer. It is called Autochartist. Autochartist is a market scanner and is able to monitor your entire watch list and constantly scan and identify chart patterns, and then it will project them directly into your charts in real time. So this will save you some time because you don't have to constantly scan the market to look for trading opportunities. This plugin will scan for you and notify you instead. So on top of being a market scanner, Autochartist also has other functions such as volatility analysis and also risk calculator. So what I mean by volatility analysis is that if you look at this point over here, it actually identifies for you the day range, the potential day range that prices will actually be trading into here. So you can manage your risk better. So this gray area is actually a take profit area as well. It's a area that they identified suitable to take profit. So in the case of a risk calculator, what this plugin does also is that you can indicate your entry price, and then you indicate your stop loss level and also the amount that you are willing to risk for this particular movement. So what happens here is that this risk calculator will count for you the trade size that you need to enter to based on your risk parameters, which is quite important when you're trading CFD. So this one is a tool for you to help you to plan your trade as well. Okay. On top of Autochartist, right, we have another plugin as well. It is called Trading Central. So this Trading Central plugin is also integrated with our Phillip Futures MP5, and Trading Central is able to portray their daily analyst view, real-time candlestick pattern recognition, and even the long and short entry and exit signals directly on your chart. So these plugins are actually free for our clients who are trading with us. Okay, so yeah, moving on, just want to share that we also have this dedicated WhatsApp line should you have any trading or account related matters. Okay, so this is just a snapshot of the daily commentaries which I was sharing earlier. So we have these commentaries daily on WhatsApp, so you can get you can keep in touch with whatever is happening in the markets, and of course our analyst views. Okay, so this WhatsApp line, of course, if you have any questions as well, be it is account opening to trading inquiries to platform, just feel free to talk to us as well. Okay, I think just give me a moment. Can't seem to share my slides again. Okay, so currently Phillip Futures is also having this MP5 promotion right now. This is a lucky draw promotion where you can actually win very attractive prizes such as a MacBook, iPhone, and a Dyson hairdryer. So all you need to do is to just place trades on our MP5 platform, and the more you trade, the higher your chances of winning these prizes. So you can just scan the QR code here to find out more on this promo. Maybe I'll just leave this slide for about 5 more seconds for those interested. Please scan so you can find out more as well. Okay, so before we move on to this Q&A, right, just want to share that you can easily open an account online right now, or also apply for a demo account by scanning these QR codes. If you like some support in your trading journey, of course, please open an account with us, and we are here to help you. So with that, we've come to the end of this session, and we can do a Q&A should there be any questions from the audience. Yeah.
All right, I hope you are ready, Ethan. We got an enthusiastic audience with questions. First off, clients are asking what is the minimum amount to open an MT5 account?
Okay, so good news for everyone. To open an account with Phillip Futures, it is actually free of charge. Okay, so once you open a trading account, there is also no maintenance fee for platform as well. So you can just open an account, take a look at the platform, take a look at the prices and spreads that we are quoting. So all this is free. Yep. So no minimum needed right now.
Okay, thank you for that. Mr. Gu is asking, is there any commission charges when trading forex or CFD on the MT5?
Okay, so for MT5 platform, like I shared earlier, we offer many different asset class, forex, CFD, gold, silver, shares as well. So for every product or every contract that you see on our MT5 platform, it is actually on zero commission. So regardless of how many trades that you entered in a day, there is no commission charges. Yeah.
Okay, and is MT5 free to trade permanently?
Yes, of course. MT5 is a free platform. There is no platform maintenance fee, and the trades done are so no commission as well.
Okay, thank you for that. We have another question. I already have a Poems CFD account. Do I need to open a different account to trade CFD on this MT5 platform?
Okay, this one is one of the common questions that we face also. It's a very good question. So Poem CFD is actually offered by Phillip Securities, and MT5 platform is offered by Phillip Futures. So both of the products, CFD products, can be both CFDs, both platform offer CFD. So the main difference is on the platform. So I believe for Poyam's platform, if you are trading stocks with Phillip Securities, you'll be more familiar with how the platform looks like, the order ticket and all. So for Phillip MT5 CFD, it is firstly 0 commission. And then of course, right, the charting is easier to use, I feel. The order ticket is also more comprehensive. You can immediately place your stop loss and take profit level. You can trade on the charts and all. And then there is also this real life P&L, which I believe isn't shown on Poyam's. So I think the main difference you need to take note is on the platform itself. Yep.
Okay, thank you. Yap is asking, how do Phillip profit if there is no commission and the platform is free from the trades that clients are doing?
Sorry, can you repeat the question? How is what?
How do Phillip Futures profit if there's no commission and the platform is free?
Okay, so for CFDs, right, there is a spread involved and there's also overnight holding costs. So be it you trade with whichever broker, be it a broker in Singapore or overseas broker, there is always this spread over here that Phillip, of course, makes a little bit from the spread. And then when you're trading CFD products, right, there is something called a financing cost. So if you're holding your CFD contracts over the trading day, so let's say if I buy one contract of S&P right now, and then I hold this contract past the trading day to next day, then there is something called a finance charge. So we also earn from this finance charge, to be very transparent with you. So of course, the charges wise, you may be thinking, how much is this finance charge? Is it a very high amount or is it a small amount? So all these charges are actually very transparent in our platform. All you need to do is just right click over here, you go to specification, and then you can see over here there is something called swap long and swap short. Okay, just let me try to share this with you. I think my screen is not showing this. Okay, I'm not sure if you all are able to see this pop-up right now.
We can see the pop-up.
Okay, yeah. So in this pop-up, right, you're able to see the contract specifications, and then there is our finance charges here. So you can see that there is this swap long and swap short. So what it means is that if you hold overnight, if you're going on long, right, then there is this charge over here. And if you're holding overnight on a short position, then there is this charge over here. So over here in the platform, right, that it will also be shown under this swap column if you have incurred any overnight holding costs. So all these charges are very transparent to you. And of course, if you are doing short-term trading, meaning to say if you are trading intraday, then you will need to bother about this, because no swap will be accumulated if you are exiting the trade within the same trade day. Yep. So I hope this answers the question.
Okay, thank you for that. Mr. Tiong is asking, can we have multiple MT5 accounts if I already have an account with you?
Unfortunately, not at the moment. Everyone is only able to have one account. But of course, if your intention is to try out some trade strategies, you can always apply a demo account on our website, and then you can have one live and one demo. So you can just play around with the demo first. The demo account is able to place trade as well, and then you can start off with 100,000. Try out your strategies. Once you are comfortable with it, and then you can place your trades in the live account. But for live account, just one account per trader right now. Yeah.
Okay. Yap is asking, just now you mentioned about auto liquidation. Can you tell us more about that and how does that work?
Okay, maybe I can show you a live example here. So example right now, my balance is 71,000 and I have no positions. So let me trade something that is higher in the margin requirement. Just give me a moment. Okay, so example, if you see here right now, my balance is 71,000. Equity is basically balance minus my unrealized P&L. So this is how they count equity. And then here is the margin required to place one trade. And then there is a margin level here. So how margin level is calculated is basically on your this margin over your free margin. Sorry, your equity over your margin. So if you are over leveraging, meaning to say you don't have a lot of free margin left, then it will be very close to 100%. So at 100%, it also means that you have used your whole account balance to as margin to place trade. So example, if I place more right now, okay, you can see that the margin is actually getting, the margin level is actually going lesser and lesser. Okay, so what I want to emphasize here is that for Phillip Futures, right, there is no auto liquidation even when your margin level drops below 100 and you don't top up. So in the usual case of other brokers, right, there usually you will already be on margin call. Margin call means that once your account balance is lesser than the required margin, which is over here, 60,000. If your account balance drops below 60,000, right, then you will be under margin call already. So what happens is that the brokers will give you usually 2 days to top up to this 60,000. If you do not top up, then they will liquidate your positions for you. But for Phillip Futures MP5, right, if you are below 100% but above 20%, there is no liquidation involved. So what I mean 20% is that the required margin here for this example is 60K. So you just need to meet 20% of 60K to continue holding the trade. So which is about just 12,000. So after you initiate your trade, you need to maintain at least $12,000 in your trading account to continue holding these positions. Should your account level fall below 100%, right? This gray bar here will also turn red color. So it's actually very obvious, and then you will take note already. Actually, your account is under margin deficit. So it's a sign for you to top up, but we won't be liquidating yet until it reaches 20%. So this liquidation is automated by the system. So what happens is that it will liquidate your positions with the biggest loss first. So once the position with the biggest loss is liquidated, it will actually bring up the margin level. Once it's above 20%, of course, the liquidation will end there. Yeah.
Okay, thank you. Lim is asking, if I open a demo account and make a trade, are the prices based on live or is it delayed data?
Okay, for our demo account, right, our demo server, the prices is very, very close to live, but there may still be some slight variation with regards to if you are doing a side-by-side comparison with the live data, but it's very close because the price stream runs on two separate sources. Okay, but more or less, I would say it's at least 98% similarity, so it is pretty close to the live.
Okay, thank you. Last question from Lim is that you mentioned just now that there is this promotion, trade and win. What are the products that we can trade on the MP5 to qualify for that promotion and lucky draw?
Okay, for this trade and win, right? Actually, every product you trade, you're entitled a chance. So maybe I can share a little in case you did not scan the QR code earlier. Maybe I can show you a little more on this promo over here. So basically, these are some of the prizes that we are giving out for this particular promotion: MacBook Pro, iPhone, some of this Dyson hair dryer, and even a gaming chair. So to stand a chance to win these prizes, right, all you need to do is to trade in MT5. So the products that you can trade is forex, our bullion, spot gold or spot silver, or CFDs. So currently, if we have this promo is more targeted on CFD. If you are trading CFD, you get higher chances. So for every lot you trade in forex or bullion, you get one chance. But for every lot you trade in CFD, be it is a share CFD or an index or crude oil or crypto, you stand two chance for every lot traded. So of course, the more you trade, the higher your chances of winning the prizes. Yeah.
Okay, I think that's all the questions that we have for today. So thank you everyone for joining this introduction to CFD webinar. Maybe Ethan, you can flash the slides again where if let's say they missed out scanning to register for the demo or even opening an account. So once again, thank you everyone for your time. We will leave this on for another minute. Okay. If you have any queries, you can always write in or give us a call. Thank you for your time.